The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Hope you had a good weekend. It's been kind of crazy around here in the eastern section of North Carolina. The hurricane just pounded this place. Town I used to frequent very often, Fayetteville, North Carolina, home of Fort Bragg, as big as a county itself. Man, they got, what was it, 15, 16 inches in less than 24 hours. That will do some damage. Cape Fear River just exploded. About 3 bridges around here are completely washed out. They're not even there anymore. A couple of dams broke. It's just been a nightmare for some folks around here. So things are getting, somewhat back in order, but it's kind of some backing and filling times, to say the least. And it's a very dangerous situation for some folks. So that's what's happened around here this weekend. I hope you guys have all been safe down in Florida, Georgia, and South Carolina. It just kind of buzzsawed the whole coast. I don't know if you guys have been keeping up with that, but just amazing. I know the debate was paramount last night, but wasn't a lot of rest around here. And I think we got through the debate. I guess they're calling it a draw, but it's a different scene these days, watching a debate relative to what it used to be. Main USA country issues previously. Now it's kind of in the mud. Amazing, huh? Thanks for you guys in the den saying those comments about the hurricane. But, it's like she's such an easy target for a host of reasons. He is too, but he can't put together a logical argument to kind of walk through to pound her. She's amazing in her own respect. So what a crazy time. And you got to figure at some point, the markets, like Steve Banger and I were talking the other day, I mean, they're going to get volatile, and I think this is going to finally become a trader's environment again, and that's what we're looking forward to. That's what I'm looking forward to. I've got the British pound up right now. Let's take a look at the weekly, and then we're going to drill down into this thing. Blaming, how can you blame a sell-off like that on a individual trader, and they're still trying to uncover what happened? I mean, if that was the case and it was a blip on the screen, then you guys know as well as I do that this thing should have rallied back up into the 130 area. But we're still 700 pips down from where we so-called had a couple of misprints by one individual trader, and that doesn't make sense. Here's the dailies. We haven't had, even with that snapback the other day, we still on Friday, we still haven't had any new daily profiles appear, anything to really lean on except for the 240s, and that's what I'm showing right now. $125.11. That's we were hoping. I think Joey and I were talking about this the other day. He was on the show, and we were talking that would be the upper limit. Never really got there. Got very close. Let's just see. 124.77. Got into the neighborhood. This in itself, appearing above price action and a wide profile to boot, that's going to be a massive line in the sand. 125.11, and we're just kind of drifting away from it. I was waiting until it got into that area, just freebie coming back up into it. Never happened. Here's the 60s, and as you guys can see, we don't talk about the 60s a lot, but in a crazy volatile environment, I want you to look how these profiles act here. There's 124.28. Here's some of the breakdowns that happened around 124.02. So right now we're down at a 60-minute inflection point. If you go into our institutional version of this scanner, which you guys have access to, let me go to the Forex section. Let me go to the GPB here. There's those inflection points. Here we are. You can blow this up. There's that 124.02. What in the world's going on with my screen here? Anyway, let me pull this back up here really quick. I'm sorry, 124.28, not 124.02. Anyway, these are all within the scanner, and I don't know why I'm having tracers there. I'm not doing LSD this morning. I'm definitely sure of that. That's weird. So 124.27, and there's the 123.86, on the bottom of that 60-minute. The bigger picture here, obviously that 240 overprice action, that's the big news. And you got to be looking to sell rallies when you can in situations like that. There's the 124.87 area up top, kind of coinciding with that unfurl on the 240s, and then here's the 60-minute areas that you can trade off of. What's going to happen here now moving forward? You've got a chance to buy the lows of the 60-minute here. Could have a little bit of a pop, but again, I'm kind of backing up and always go back to this concept. What's the long-term leverage on this? It would be selling rallies. So selling that rally back up into that flexion point, selling that rally, and then selling the breakdown. So again, I'm not a big fan of buying the British pound because it's kind of against the long-term MO here. All right. Okay, let's take a look at the euro. This is something I've just been waiting to fall apart. Just amazing how this POC continues to hold up here on the weekly at 111.43. Here's the daily on it. So again, I'm trying to sell closes below 111.43 if I'm trading this on the outright, and I've got a long-term trade on this with the hedge, bought the calls in the money. Seems like eons ago. Let me get this back in the right spot here. I have no idea how that popped up. We're going to look at that on the break. The Japanese yen. Again, talked about, hopefully getting a close above 103.51.52. That didn't happen last week. And we're going to talk about this a little bit more as it starts crowding back up into that area after coming down into support on these dailies at around 102.70. So we're going to be right back, folks. We're going to talk about the yen. They're going to move slowly.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And gold's trying to put in a new profile this morning. This is the big area that we breached, 1295, 1296 on the weekly. That's the long-term big-time number on gold. Here's the daily situation. There's that 1309, 1310 we talked about before, the 1296 area. So now, hopefully we'll have some new intermediate inflection points to play around with here on gold on the December contract. Here's the 240s. So your inflection points on the 240s, all within the scanner, 1263, 1253, 1254 down below. How do you trade this right now? This is kind of a wait and see for me. I'd rather see this thing, have some more longer term inflection points in the just general neighborhood first. It's just had such a serious move down. Settling out down here, it could consolidate and move lower. I mean, anything can happen, but it needs to kind of. There's going to be some noise down here, and I think you got to look at this on an ultra short term if you're going to trade it right now. Otherwise, just kind of stay out of it. The beans have stayed below 964. Looks like we're ultimately going to get back down to 944 and even lower. Here's the long term on the November contract, and still kind of stops above 964 in the long term trade there. Oil getting a little bit of a power move going here this morning. We're trading about 50.38 on the November contract. Let me see here. Yeah, 50.37 right now. So here's the weekly. I'm not so sure we're going to stay above this 50 area, 49.75, 50. Again, I'd love to see this thing get back down below there. A lot of people are talking about now oil in the 60s, and that's when things usually turn around. But right now it's strong. It's above that 50 area. You can't play around with it on the short side above that area. So it's kind of, again, a wait and see. Actually tried to nibble around 50 this morning on the short side, and that I'm stopped out. Here's the S&Ps. This has been just churn city. I mean, just nerve-wracking as heck around this 2150 area. Staying above there this morning. I mean, as you can see, we're kind of doing this pretty long-term flag pennant type deal going on here, but really, not in, if you back up here, this is the December contract, eventually this thing's going to bust out pretty violently, but, again, it's just been a pain. Looking at the breadth here, too, in the scanner, as I show it, just been kind of a mixed bag, big middle grounds on both of those time frames. Apple. It's Columbus Day, by the way, in case you guys didn't know it. We're still working. Here we go. Apple still kind of stuck, 115.15, up a little bit this morning. Again, the profiles keep me out of trouble, allow me to base and attack trades around those inflection points. And, in this type of situation, as Juan and I were talking about the other day, I mean, you can't really, there's nothing to hang on to up here, and it's almost going back to the same general principle, okay to be long, not okay to be short yet. So, this is one where we, Friday we had a new, that yellow bar on the weekly, we're probably going to have a new profile output this morning on Apple, so pay attention to that. If you've got the scanner, you're going to probably on the opening have another long-term profile that's going to appear on Apple. If you'll see that yellow peel back, that's what that means. That was enforced Friday. So we should, in theory, have a new long-term profile on Apple to view here, I guess, in about another hour. Dollar. We hit the targets on this initially up at 97.15.16. As you can see, backed off previous week. Let's see what's going on here. Hold on. Last week, excuse me. Backed off, and now we're kind of churning around here. Here's the daily. So not a big fan of being short this product. Nothing to really hang on to right now to trade it. We've kind of reached our targets and we backed off. So we got to allow for some new daily, kind of the regulation of that weekly trade to get some new daily inflection points here. Let's take a look at Tesla. It's like, I was listening, I don't know if you guys caught this morning, the guy from, I guess he was from the coal industry or something, that was on CNBC talking about some of Hillary's platform MOs, I guess, and then he kind of got off on Tesla, calling it just a complete fraud, which I guess they've gotten over $2 billion in government subsidies. And let's see where we're at this morning. Are we printing yet? This might be a real print around 200. So here's the long term on Tesla. I've not been a big fan of being long this, just been looking for short opportunities. And Friday you kind of caved in, but we're rallying back up now into pre-market into 201.16. A stock that looks like it's on the cliff again, and you're kind of getting a market sympathy type empathetic gap up this morning. 201 could be a shorting opportunity on Tesla here. You had those daily profiles appear Friday, and I like this. I like this from the short side. We're going to hit Amazon. And again, how can you short this stock? We've talked about, I mean, this is one that's just been so clear and evident. Okay to be long, not okay to be short. And we've talked about, do yourself a favor and don't step in front of a moving train. When this thing comes down, it will, it will evaporate and just catch some people in a bad way. But, we don't want to be the ones that try to figure out that high print. ever. So it's a pretty dangerous game, especially with a stock like this. Still not anything to take a hard look at from the short side. Home Depot, this has been a kind of an interesting situation. Had that weekly profile appear above price action last week. 132 is the new lid on that thing, and not getting a hurricane bounce here. 129.55. I think we're easily going to get below 126 on this one. Guys, we're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Going back to the Japanese yen really quick, Joey and I specifically talked about getting a weekly close above that 103.50, 152 area. That didn't happen last week, backed off. That's always, again, kind of being patient. We're coming right back up into that. I know the long-term trend's down. We kind of got to the resistance areas. Really looking for this thing at least to have a daily close above 103.50, 152 to start looking at that. What the heck happened here? Facebook, here we go. Here's a weekly on Facebook. We talked about this last week. They had whatever they were saying, that they were rigging the numbers unknowingly on for the advertisers. But we talked about, where in the heck are they going to go? It's a billion people plug into this thing on a daily basis. What more do you want? No matter if they are cooking the numbers. Talked about that being a buy point. That was just like to the tick almost last week. Down, let's see, 126.80. That unfair high is 126.32. Pre-market, I think we actually got into that. A little inflection point down there. Talked about, you know what? Got to buy it. Strong stock. On support. Just blindly push the buy button. Just like Amazon. 130.14. Last week's profile. That was 2 weeks. Excuse me, the week before we talked about that. Sorry. So last week, 130.14. So kind of if you want to call it a resistance area. But again, you're playing with fire on things like that. Those are profit-taking mechanisms more than shorting mechanisms, put it that way. Let's take a look at Twitter. This is, man, they let the air out of this thing, huh? Now they're going to have to start thinking about some different things. 1722. All right, so we talked about this little thing. Now we're down in the main weekly profile here. So let's take a look at the daily. We talked about this one. Again, the news came out. Nobody's really a suitor at this stage. Rallied back up into that 2106. We reached a high on Thursday of 21. So 6 cents from that. Very good neighborhood to be in a volatile scenario. Almost caught it to the tick, 6 cents. And we talked about selling that. All right, so now we're gapping down again. Looks like we're trading 17, that general area on Twitter. Now 1890 is going to be your resistance area on this. So we're down in here in reality. 1890 is going to be resistance. I don't think you can sell this in the hole down here. So those are the big numbers on Twitter, all in the scanner. Let's take a look at Alibaba. Getting into movie making now with Steven Spielberg. David White may talk about this on his show today. I will be listening for it. 106.60. Looks like we're trading pre-market. Should have a new weekly profile on BABA, B-A-B-A. This was last week's kind of close with that peel back, so we should have something to pay attention to here, and we should look at exploring this entire fair auction. If you guys have any questions on, I'm kind of feeling the same way, P, in the den on Twitter. They spend a lot of money, a lot of other people's money. Talking about 14 as a possible target on that. Let's take a look at Merck. All right, so I got some new drug news that's decent out for the stock itself. Looks like we are printing 65 general area this morning. So here's Merck. Again, profile appearing below price action on the long term, very bullish. And then, obviously, I don't know if you can call this pump and dump. I don't think this is a pump and dump. It's a good pump though. New support on this is going to be 63.02. And we're going to take a look at this little puppy here. IBM. Looks like 156.50 is a real print this morning. I'm thinking that's a real print. I kind of like this as support around 156. So trying to hang in there with IBM as a long opportunity, actually. Dollar we spoke of. I want to look at copper really quick. So 2 weeks ago, we came right back down to support 214.05. Again, that's kind of the line in the sand. Big time stops down below on that one. Here's the daily on copper. There's that 214 general area. Had big, massive support on the weekly and daily profile, kind of rattling back up into 217.95. Still long-minded on this one with stops below 214. The Shanghai is finally getting going here. 30.48. So again, was hoping we could get back above and get into a long opportunity on the Shanghai. I've been kind of preaching this. Still think we can get back up into 30.98 and even higher on the Shanghai. So keep your eye on some of those ETFs we talked about, trading the China A shares. Let's take a look at silver. This one got hit just like gold. I don't have to tell you guys that. Here's the daily on silver. It's at 1885.86, which was right before the 1860.61. So kind of like gold, you do have a weekly POC here you can leverage against 1755, but again, I think we're just going to kind of spin around here. You're going to have to, I think, look at gold and see if that gets some footing at all. But again, I like the silver trade a lot better than the gold trade from the long side. Hitting December corn, pretty decent situation here for corn in general. Have that profile appearing below price action. Support and a buy point is going to be 337 in my opinion. Now that that's kind of appeared and is a factor now. We're going to hit the XLE and some XLE stocks after the break here, folks, but I want to reference the XLE really quick. Here is the XLE, and last week we came down into 69 and bounced, and we're going to take a look at some oil stocks when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and we're going to talk about the dollar and silver in just a bit. Phillips 66, a lot of these oil stocks, with oil just ramping up like that and getting into that 50 area, I was trying to, grab some of that on the short side around 50. I guess just stops too tight. God, I hate getting stopped out. A lot of these oil stocks don't look like they have a lot of gas left in them, and a lot of them just look like they don't want to cooperate. Phillips 66, one of them, 80.67, 81.06. Resistance on this, let's see where we're at this morning. Looks like we're printing 80.35, so, down. Stock that's continuing to kind of make lower highs here, and I think you got a short opportunity here on some of these oil stocks. Let's take a look at a couple other things in that sector. Rig, another one, just kind of coming up into a top of a profile, 1062. I understand that's a cheap stock. Wait a minute here. But, on a relative strength scale, it's relatively weak. Diamond Offshore. Yeah, this is a similar situation. I mean, you got 1791 there. This is our weekly profiles. This is our daily. Just not looking good at all. So if oil comes down at all, I think a lot of these could just kind of roll over. Schlumberger, again, getting up into those weekly highs around 81 on this one too. ExxonMobil, let's take a look at that on our better charts. So, 88.66 and 85.12. That's the big numbers on ExxonMobil. You're trading about 87.08. So it looks like you got resistance around 88.66 on the short side. Somebody was asking about the dollar and silver. I think the dollar is going to go higher. I'm not a huge fan of shorting silver or gold. So that's why, I think coupled with, I think they got to figure out the solid ground down here, gold and silver. And, by default, having to reprice itself to a stronger dollar. I think, these are, again, I'm showing the dollar right now, but these are more reasons to kind of stay away from those two trades right now. It's going to be a little choppy. And if the dollar, catches hold, I mean, we talked about taking some weight off around 97.15, 16 on the dollar last week. Thank God, that's, again, these are profit-taking mechanisms now instead of shorting because of the biased opinion on the dollar. And, again, that, by default, that could reprice those two metals. All right. A couple other oil stocks here. let's see where we're at here. Here we go. MPC. So this is another one. Looking for this one to crack. You've got, you kind of got up into those unfair lows and kind of started coming off. I'm really, really interested in shorting this. Even though we've kind of edged up on profiles, I'm really, really interested in shorting this below 40.34. Halliburton, kind of Schlumberger-ish, coming into these unfair highs around 46.17. Not wanting to make new highs here in the grand scheme of things. Let's take a look at our little buddy here, Southwestern. Nothing doing. Chesapeake. This is our weekly. Now this one we talked about, price above, profiles appearing below. Kind of relatively weak though, not exactly looking like things are lining up there to try to trade that. I'm not impressed with any of these oil stocks, to be honest with you. Johnson & Johnson, this is one we've been looking at from the short side. Last week kind of caught a bid above that 118.18. So now you've got resistance at 120.75. Where it's always better to kind of look at, selling resistance when you've got a crack in the armor like that. Still looking at Johnson & Johnson in that light. Let's take a look at Procter & Gamble. This has been the you can't do wrong stock on the long side. You've got the anti-stock type behavior going on, and you've also got relative strength at the same time. So again, this has been a really, really cool trade. We've been talking about this for a while. Just like, don't short Amazon, don't short Facebook, don't short Procter & Gamble. For a host of reasons. Let's take a look at Coca-Cola. This one, let's see, looks like we're printing 41.90 this morning. So coming up into resistance again, getting a little empathetic move back up with the market gapping up. Market's still gapping up, right? Yes, it is. A little bit of resistance shot again on this one. It is what it is. It doesn't have to be on sale. Let's take a look at McDonald's. These are stocks we've been following from the short side. Again, it's so cool when I love a boring trade and things that raise their hand, say, I don't want to be bought. We talk about a lot of short opportunities on this show, in case you hadn't noticed. 115.42, McDonald's. Again, I don't know if this is a real print or not this morning. 114.23. We're gonna stay away from that. But I hope it is gapping up. Gives you a chance to get short more. Here we go. Disney. All right, so this is one we've also been looking at from the short side forever. Reason being, just relative weakness situation. Got a new profile here, unfair lows. We could kind of come back and you either want to trade the breakdown below 92 on this or wait for the rally on the long term up into 96, 97. You've got shorter term intermediate resistance points that has kind of been falling in line with. But getting below 92 is really going to give this stock some more momentum on the downside. But again, we've explored the entire fair auctions on the intermediate. Been a nice little place to lever trades against on the short side, 93.25. This is a stock I was looking at a while back, and International Paper. Not a lot of damage done. Just kind of caved in below 47.70. That's what stops are for. And you've got another place to pick it up at 45.20, so still like that trade on IP. We got to get our last break here. Crept up on us. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're showing the XLF right now. This is our daily 1950 daily support on the XLF, and then you've got that 1990 sitting above. And while we're talking about the XLF, we've got to go back to the little symbol called WFC, Wells Fargo. I'm going to do a little Wells Fargo watch this morning, 4565. Kind of rallied back, gapping up just a tad this morning. I like this. Again, you got to, in these downtrends and these, opportunities, you don't want to just kind of sell things in the hole. You want to try to use the profiles. You got a nice inflection point here. You got to get back down below 45.31 to start stepping on the gas again with this. Again, I think some new regulation and some other painful situations are going to be coming down the pipe for Wells Fargo. Make sure you put your stops in. Just want to also point out that I dropped by last week. I'm showing it on the camera here if Al can pull it up. This is a plastic cup that I was able to obtain from Wells Fargo, the emblem on there. Again, trying to save me as a customer. Just weigh it out. A 22-cent plastic cup versus staying there and getting run over. Taken to the cleaners when it comes to fees and things of that nature. Weigh it out. Is it worth it? But you get a free cup. Let's take a look at JP Morgan. Is that joke getting old? Probably put the brakes on that pretty soon. It doesn't get old to me, though. All right, JP Morgan, again, we talked about staying away from this thing on the short side. And again, they got it licked. They know what they're doing as far as what we've been talking about goes when it comes to banking, or what they call banking these days, schemes. 67.77 closed above that profile. This is, again, strong of the sector coming down into support. 65.14 caught the bid. 67.77 closed above, and now we're gapping up to 68.47. So new support now more than likely is going to be 67.77 on this stock, and believe it or not, that is very coincidental with the daily unfair highs too. It doesn't have to be too high, and we've talked about you want to buy the strong stocks in a sector and sell the weak ones. This is a prime example of that. And they don't have to give away free 22-cent cups at JP Morgan to keep you as a customer. All right, let's take a look at Morgan Stanley. Here we go. All right. Okay, so looks like real print 32.23. Again, this has been one we talked about, this type of action profile appearing below. This rarely is not the case when we have something like this. It's a very strong signal. You've got a strong stock in a sector, buy strength. And here's Morgan Stanley, kind of as that profile is appearing below price action. Here's your support areas. Still something not to play around with on the short side, folks. Bank of America. Again, that key reversal, getting back above 1538. We reached some targets we talked about last week, 1624, and we're printing that this morning. So what do you do with Bank of America? You don't short it. You just look at this as a profit-taking opportunity, guys. Thank you. Stay tuned for Larry. You will thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.